Time for the second keynote speech of the day by Mr. Omar Mustafa Ansari, who is the Secretary General AAOIFI Bahrain. So I would like to invite Mr. Omar Mustafa Ansari to kindly start with your keynote speech. Thank you.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Dr. Sajid Mahmood Shahzad, Vice Chancellor, Minhaj University, Lahore, Brother Mr. J.M. Abbasi, Director, Islamic Banking, Central Bank of Pakistan, Dr. Hussain Qadri, all respectable scholars, panelists, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, I would like to thank you all thank the organizers for inviting us and giving us this opportunity to be here in this very important event on a very important topic. I would also like to thank you for giving me this opportunity to be in the beginning amongst most senior people. A lot of them I can see in the panelists and even in the audience, those senior people from whom we have learned. So I would like to thank you for giving us an opportunity to be with them, even virtually. Inshallah, as soon as things get better, we will be having these events physically and will be having opportunity to meet all of them. So I would like to say salam to all of my respectable scholars, friends, brothers, sisters, whom I can see in the participants list and in the panelist list. Is the screen properly shared? Can somebody confirm to me?
Yes, it's shared. Thank you.
Thank you very much. The topic of the conference is very important in these days. And it's not only about how to handle things in these difficult days. It's also about what to learn from these days, how to pass this resilience test that we need to pass in this difficult time, how to establish a way forward for the Islamic finance industry. And not only the commercial Islamic finance industry, I would say I would talk about comparatively a broader spectrum that needs to be addressed and needs to be considered. For sure, the main focus will remain on Islamic finance industry, but there are aspects that we need to consider, thinking out of the box, trying to consider the broader objectives, trying to consider the broader Islamic economic system, try to understand what we learn from this crisis and from these testing times and trying times, what we learn for the way forward, not only as a commercial industry, but also as a ummah, as a society, as a country. So for that, I will just very quickly touch upon some of the global economic trends from which we can have some messages. Obviously, there are a lot of trends. Some of them I'm not going to discuss, but I'm just going to identify some of the important trends that give us some messages. And then Islamic finance during and in the post-COVID-19 world and the way forward. This will be the agenda of my today's discussion. For the global economy, most of you are already aware of most of the scenarios. Most of you are more learned than me, maybe more updated than me. There are a lot of other charts and graphs that can be there, but we need to understand that these economic data, these economy charts, they provide us some messages, and we need to understand those messages. The first message I would say from this one, it is a big crisis if you see the impacts which are there. And still there are, when you see on the other slides, there are some sectors performing better. There are some opportunities which are coming in within this time. So what the message we need to learn from these economic data, these charts and graphs, is that is still, while these might be one of the worst times in our life that we are seeing, and maybe the worst challenge that Islamic finance as an industry is facing, because the 2008 crisis was not a genuine test for Islamic finance, I would say, because number one, it impacted those parts of the world more where Islamic finance is either not existent or it's a very small scale. Secondly, it was primarily a financial markets crisis, not primarily economic crisis. The economic crisis followed upon that, but eventually the financial crisis was the one that actually created the disasters. And those financial markets had very minimum presence of Islamic finance. So I would say that 2008 crisis was not a real genuine test for Islamic finance. This crisis, this financial and economic crisis, along with the social aspects of the same, it is actually the biggest challenge that Islamic finance has faced since its inception. So we need to understand that while a lot of economic data is going negative, still there are a lot of lessons to be learned, lot of opportunities coming on there. Some of the data that is coming from the capital markets might not be the most suitable one, because we need to understand that with the financial crisis, with the economic crisis and financial crisis, most of the governments cut down the benchmark rates significantly. So lot of capital actually moved from the fixed securities and banks to the capital market. So the capital market performance may not be the best judge, but still that capital market performance can give us an idea about as to how even in these difficult times, some of the sectors not only survive, rather they performed very well. Some of the wealthiest men of the world became wealthier during these times because the way the world was moving and the way world was doing business was changing. And this is one of the most important messages that we need to learn from these charts and graphs, that what actually has happened. If you see, the information technology is still in this time has performed much better. I'm not going to take most of my time on the fintech and information technology. I'll touch upon its significance. I believe this conference will have enough discussion on this one, and we have seen some very significant and very good events, primarily on the fintech and information technology part. But here, I just would like to talk about the messages. The real sectors normally did well. The information technology and the new technologies and the new business ideas, they all did well. And this is the message for us, that not only the information technology, but the new business ideas might be the thing that we need to think of. This might be the message that we need to get. If you see, the intangible assets are going up and up, and tangible assets are going down. For sure, this data coming from the capital market includes the goodwill as well. But generally, if you see, the world is moving towards intangible assets and the business is moving in different directions. These are some of the very important messages that we need to learn from here. And a very quick example is the e-commerce penetration in the United States. You can see in 10 years, it reached from 5.6% to 16, and in 8 weeks, it moved from 16% to 27%. A lot of us sitting in Pakistan who were never using any online ordering system or any app like that, now doing most of our banking and most of our purchasing activity, lot of our purchasing activity through online apps and online services. This is just one example. Again, as I mentioned, I'm not going to insist only on the need of fintech. I'm going to emphasize on the need of the new ideas and the changes that might be needed. Now, coming to the next part of my discussion, and we need to understand that these times were difficult, and the regulators and the entities and the banks, they all have to play their role in ensuring that the system survives and the system goes on and continues in a manner that we are actually able to handle the risks that the organizations, the entities, the businesses, the banks were facing with regard to the overall failure or the overall going concern of the entities individually and the system and the industries collective. collectively. So all of the regulators have played their roles, and you can see that there were a lot of things coming in, and these things have impacted, in addition to the general business trends which went down or which changed along with the financial crisis and along with the hurdles in moving forward and hurdles in operating activities, operational and functional activities. We also had to handle so many additional issues. Some of them, just to touch upon: policy rate cut, financing and refinancing facilities, avoidance of layout of workers, deferment and restructuring of loans, the civil works, digital payment support, foreign exchange issues, banking services. So there were a lot of, again, I'm not going for all the details, but we need to understand that there were lot of challenges, and most of the regulators have come up with their own response to those challenges. AAOIFI, as the standard setting body, also came up to respond to those challenges, and we'll touch upon in the next few slides about some of the most important challenges that arose during the COVID-19 crisis for the Islamic finance industry, and how we propose their resolution, or how we propose the solutions within the available resources. I'm not going for AAOIFI issued very good two statements on the governance side and on the accounting side for all the significant challenges that were coming to us in the wake of this crisis. Some of those important issues I will just touch upon here: the role of board and the other organs of governance, the payment moratoriums, the Sharia governance role to be played, considerate and fair dealings with employees and the stakeholders, use of charity funds in these times, and the implementation issues. We were having issues on the implementation of our standards. I would just like to touch upon some of the key takeaways here. What were the key takeaways from the governance side? The first one: Sharia boards and central Sharia boards shall provide proactive resolutions and guidelines. These testing times are when actually the guidelines and solutions are needed the most. And this is the time when the Sharia scholars sitting in the central Sharia boards and sitting in the Sharia supervisory boards of the individual institutions have to play their role. Other organs of Sharia governance also have to play their role. Now, there are two types of roles. I'm not going to go into detail, but we need to understand that on one end, they need to help finding the solutions. So they need to help the management in finding the solutions. And at the same time, they need to keep an eye, because these are the times when maximum number of Sharia non-compliances happen. So this is the second challenge, that on one hand, you have to support the industry, the individual institutions, the management to find out better solutions, for example, for restructuring of transactions, for deferments and all these things. But at the same time, these are the situations where there is a risk of lot of Sharia non-compliances because of, number one, there are unprecedented type of transactions, a new type of transactions. So the level of knowledge of the staff and management might be very low. And secondly, because of the financial challenges, there is a risk that the institutions may be under a pressure to go for more commercial aspects, and which may at times result in compromises on the Sharia side. Those charged with governance, that is board and audit committee, have to play their active role, not only for Sharia compliance, but also ensuring fairness and transparency for different stakeholders and keeping a balance. And it's a very delicate balance that they need to keep between the conflicting interests of different stakeholders, the shareholders of the institutions, the depositors, investment account holders, the customers of the institutions, and other parties. So this is actually a very delicate balance that they need to maintain, and this is a very challenging situation. With regard to values and ethics, our statements and our presentations in conferences, our own conferences, they all emphasize that Islamic finance is this point of time, as Brother Jim Abbasi mentioned, that you need to be resilient. So, but resilience is not only about financial stability. Resilience also includes the aspects of being close to your values and ethics and your core, the objectives. So here we have emphasized that AAOIFI should preferably allow payment moratoriums in line with the in line with the guidance of the Holy Quran, even if it is not required by the relevant regulators, then they need to minimize harm to, because obviously there has to be some harm. These economic crises, when there are losses, there has to be some harm to different parties. So they need to keep a balance on the interest of different parties and minimize harm to uphold fairness, justice, and compassion. They need to be considerate and fair with dealings with employees. Additional CSR consideration should be there. And one very important aspect that we suggested is that Islamic banks have charity funds all over the globe. They need to use those charity funds without any delay. At times, those are kept for a long period of time. They need to use them without any delay, with a very pragmatic approach for using them in the most effective manners in line with the CSR objectives. One very important takeaway that I would like to talk about here is the core message. COVID-19 reminds us of that, reminds of us of Allah and His Tawheed and sole authority in the universe and the humankind. And death and its reality, and it's being close to all of us and our loved ones. Significance of our health, wealth, and all blessings of Allah, and the need to perform shukr for that in our hearts, expressed in words and proven with actions. Unreliability of all assets, wealth, and people in this worldly life, our core incompetency to determine our priorities in life and how they become irrelevant in the blink of an eye. Our purpose of life in theory and what we are doing for it in practicality. This message is for all of us individually to consider for our individual lives, but it is for the whole ummah, for the whole society. And here, actually, I want to emphasize on this message for the whole Islamic finance industry to consider that while we have our commercial objectives, but we should give priority to these considerations that actually COVID-19 is reminding us of. Islamic finance is a combination of faith and commercial aspects. You cannot ignore the faith. At times we have seen situations where the faith element and broader objectives of Sharia element are put on the back burner as compared to the commercial aspects. We believe that Islamic finance industry during these times should reconsider its behavior, its approach, and should move forward in the right direction. There were significant issues that we addressed on the accounting side. I'll not touch upon them because of the limitation of time, but I would like to touch upon some of the key way forward aspects. On the institutional level, what we need to do at the institutional level at a minimum, conduct our risk assessment and organizational resilience studies, prepare, test, and execute business continuity management plans, strategies, including disaster recovery plans, collaborate with community at large, assess and test various liquidity risks and profitability challenges, test and improve the risk mitigation strategies and apply as applicable, and aim for continuous improvement and apply corrective action plans based on real life experiences. And we have a lot of real life experiences in these times. The way forward with regard to a very important aspect, actually, I would love if I had more time to discuss on this aspect, but I would like to just quickly touch upon on this thing, because I believe Islamic finance has to play a significant role in the revival of economies. GDP of most of the countries is below 2%. Lot of them are actually in negative. For countries like Pakistan, it is estimated between 0.5 to 0.1, and even by some of the experts, including World Bank, I think in negative. In these situations, we need to consider that Islamic finance has to play a significant role in revival of economies. But it's not only a lip service. Actually, it's saying that, okay, we will do that and we want to do and play our role, might not be sufficient, because revival of economies may not be possible through conventional and traditional banking practices. There is a lot of unemployment. There are people who are underemployed. There are situations where the smaller institutions are nearly closed down, or they are near to be closed down, or they are already closed down. There are a lot of issues that cannot be addressed through the traditional banking practices, where you just do the financial intermediation. Additionally, you need to understand that the low benchmark rates which are there and which may continue, not only in Pakistan, most parts of the world, you need to consider that they are not very supportive for the traditional banking intermediation practices. So what is the solution? The solution is that we need to understand that we have to connect ourselves to the real sector, number one. And secondly, instead of the conventional and traditional commercial banking style, intermediation style, we need to come and support the risk-sharing equity products. We need to support the entrepreneurship development. We need to support the smaller MSME sector, which is actually not on the priority list for us, need to be on the priority list. If we want to say that we really want to play their role in revival of economies, and I believe that we need to do that. And for that purpose, actually, we need to change our priorities in the times to come. And it will actually give us a very good opportunity to test these things at smaller scales, because we are not talking about going for musharkas at big scale. We are talking about developing good portfolios where you can support the entrepreneurship, you can support the small and medium enterprises through genuine risk-sharing products. And again, risk-sharing products are not always profit and loss sharing products. A genuine salam can be a real risk-sharing product, and it can be used at a larger scale for supporting the agriculture sector in the country or in the region. So actually, I would love to discuss more on this point, but actually, I believe that that my time would not be permitting that, and I would propose that this is a subject that our upcoming speakers also need to touch upon. Promotion of Islamic social finance. Again, Islamic economic system cannot be limited to Islamic finance, Islamic commercial finance. And particularly, we have seen people saying, oh, Islamic banking is working for so many years. What difference did it bring into the economic system? Islamic economic system is not only dependent on the financial system. Obviously, financial system is a significant part of it, but unless you change the way people trade, unless you change the way the governments behave, and the government's monetary policies, and the government's spending policies, and the government's infrastructure policies, all these things actually affect the way an Islamic economic system can be brought into the real life. But the significant aspect on which we can work now, and which AAOIFI has started working as a standard setting institution, and we believe that a lot of important bodies like Islamic Development Bank and some other bodies are working, and some of the regulators and countries' governments are also working, is to promote the Islamic social finance sector, including Awqaf and Zakat in particular, but surely there are a lot of other aspects that are there, including non-commercial Islamic microfinance and other. So for that, government level support shall be there. The regulators have to play their role. The infrastructure need to be provided by the regulators through regulations, standards, as well as technology needs to be available for that. And for that, regulators have to play their role, and the market players have to play their role. Islamic social finance need to be integrated with the mainstream Islamic finance industry. When I say it needs to be integrated, it means that to some level it has to be taken as a part of Islamic commercial finance, and to some extent it has to be considered as a support activity to be provided by Islamic mainstream finance, Islamic commercial finance to Islamic social finance, and creating support and coordination mechanism for that purpose is very important. So this is again one of the important aspects. It is important for the way forward. It is important for the revival of our economies. Some of the things are very important that we need to understand, that even if we want to make money, we need to support others. If you don't let other people make money, you will end up in a situation that you don't have any customers to earn from. So for the betterment of the Islamic commercial finance, it is important that the overall economy grows. So Islamic commercial banking and Islamic commercial finance industry cannot close its eyes towards what's happening in the economy. They need to play the role in sustainability of the economies, in growth of the economies, so that eventually they earn better as well. This is very important aspect that they need to understand, that it's not only about the promise of Jannah, it's also about the eventual growth that you will get with the growth of these economies, if these economies actually grow. The customers of Islamic social finance will eventually become your customers if you support the activities properly, and you make sure that there are people moving from the poverty to the entrepreneurship levels. And those entrepreneurs will be your customers eventually. You need to understand that part. And if you ignore it completely, then what happens that the economy shrinks, the economy does not perform, and you eventually will not perform out of those. Leverage and harness the technology. Initially, I discussed about it, and I mentioned that there are a lot of already good events and things. So I'm not going to take significant time on that, but quickly, I would say that we need to understand the new normal. We need to use technology in our functions. We need to invest in technology ventures. These are going to make good money for us eventually. We need to, the regulators and the governments have to play their role, and technology needs to eliminate the conventional banking hurdles. Technology needs to make the banking or financial activities, in better words, easier for the masses. So technology can actually eliminate the conventional banking hurdles and difficulties, and it can eventually give you better returns in the times to come. With that, I'll touch upon the last slide, that is the way forward. Other key factors: support, engage, and strengthen relationship with regulatory and supervisory authorities. Consider the crisis as an opportunity to prove industry's resilience, sustainability, risk averseness, values, and ethics. Use this opportunity for diversification, and greater level of harmony and standardization is needed. I don't want to go into that detail because every time people say that, Omar, you are selling your own organization, so I don't want to go in that detail, but I would like to reemphasize that standardization and harmony are very, very crucial and important. With that, I would like to thank you all, and again I would like to thank the organizers for inviting me and giving me this opportunity. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.